So let us just have a brief look where we finished last time, ladies and gentlemen. You know that we finished the note that reconciles profit before tax with cash generated from operations. We also discussed the reasoning behind that. We finished the operations section. We finished the other operating section or other operating activities. So what is left for us today is to do the investing activities section, then to do the financing activities section, and then that final reconciliation at the end. So that will then conclude question 3, and then we are going to start with question 4. Okay, ladies and gentlemen, so when it comes to our investing activities, let us just ask ourselves a question or two before we actually kick off with that, ladies and gentlemen. What does your investing activities have to do with? If you can type in the chat for me, please. Non-current assets. Thanks, Mbuso. Thank you very much. Thank you, Nkobile. Right. So your non-current assets or fixed assets. So clearly we will have to go and look at the face of our statement of financial position to go and identify which categories of non-current assets do we have, and then we'll have to go and see whether there were any disposals of any of those non-current assets? Did we acquire some new non-current assets, and what was the cash flow implications of those? Right, so let us go to our statement of financial position. So we're going to scroll all the way up to the top. You all know that this question is available as part of the question bank, and I've also uploaded this version, the one that we are working on, to the folder under topic 7, statement of cash flows. Right, so there we can see we've got property, ladies and gents. We've got property, we've got equipment, so that's all part of property, plant and equipment, or PPE. There we've got the cost and the accumulated depreciation, as we've already noticed last week. We've got vehicles, so that is still part of property, plant and equipment. So we've got 3 categories of property, plant and equipment, and then we've also got investments there, which will be part of your financial assets. Okay, so now we must go and see, did we acquire any new non-current assets? Did we dispose of any? Perhaps a good place to start, ladies and gentlemen, is to go and have a look at those items that we have marked with an with an I last time. Remember last time when we started with the question, we already identified items that will belong under our operations section, or so-called other operating activities, or financing activities, or investing activities. So let us just go down to the additional information there, and we saw that this whole paragraph here, this whole paragraph 2, we've said deals with investing activities, right? So all of that information will have to be taken into account. Now let's maybe do it in the order that we find it in the statement of financial position. So the first one that we find there is property. So just at a glance, we can see that the property, which is either at cost or at valuation, depending on whether we are using the cost model or revaluation model for property, it actually decreased from the beginning of the year when it was 1.1 million rands, and it decreased to 875,000 rands. So it appears to us as if property were disposed of, but it doesn't necessarily mean that some property hasn't been acquired as well. So let us see what they tell us about property in the additional information. So let us scroll down to that. They say their property was sold for 260,000 rands. Now, yeah, in this particular question, they make it very, very easy for us, because if they say that property was sold for 260,000 rands, it also means that is the proceeds. Remember, now we're not talking profits, now we're talking cash flows. So that is the proceeds on the disposal of property. They also add there no further sales or purchases of property were made during the year. So it's only that one, ladies and gentlemen. So we can simply take that figure to our statement of cash flows. But just for the sake of completeness, I want to discuss it further because not every question is going to be so simple as this one. So I want us to go and discuss the reasoning as well. Okay. So let us now, just initially, because we know that the proceeds have been given, we take our figure of 260,000, we go to the face of our statement of cash flows, and there we are under our investing activities. We describe it exactly as such, proceeds from the sale, or I prefer normally to say the proceeds on the disposal of property so that it doesn't get confused with sales of inventory, for instance, right? So proceeds from the disposal or sale of property, 260,000 rands. Inflow or outflow, ladies and gentlemen, if you can type for me, inflow or outflow of cash. Inflow of cash. Thank you all. Yes, you are spot on. You are all correct. It's an inflow of cash because we have disposed of some of the property, right? And we got money in return for that. So therefore, we are going to show it as a positive. But I just want to also go and have a look at the reasoning or the whole let's call it background to this situation. So first of all, if you can maybe just start for me, what was the cost of the property that was sold? What was the cost of the property that was sold? You'll have to work with me, ladies and gentlemen, please. Hopefully you all have calculators handy. 225,000. Thank you, Kubile. That seems to be the same that I'm receiving. Thank you, Luto. Thank you, George. 225,000, right? So the cost that we've sold, cost of the property that we sold was 225. Now let's just go and see whether everything is logical. So if we had a cost of 225,000 and we sold it for 260,000. Did we make a profit or a loss on that disposal? We sold it. We made a profit. Thank you all. We made a profit because we sold it for 260, but the cost was only 225,000, I think you said. Thank you, Nkubili. That was my next question. So what is the profit on the disposal of property? Therefore, 35,000, as Nkubile has already mentioned there. Thank you all. The rest of those who have answered, let's see if that now works out, ladies and gentlemen. We're just testing this. What does appear in our statement of comprehensive income? Voila, there we go. Profit on sale of property or profit on disposal of property, 35,000. So it all works out, right? It all makes sense to us. If I remember correctly, the reconstruction of the property account was also provided. So you could have gone and reconstructed that account. It's probably not necessary in this question because it was given to us very straightforward. But if you want to reconstruct it, which is always a good technique, you would have had an opening balance at the beginning of the year of 1,100,000 rands. You would have had an opening balance at the beginning of the following year of 875,000. And you remember our little rhyme from last week? We said, where does that opening balance in the next year come from? It comes from the opposite side above the line. There we go, right? And then, ladies and gentlemen, all we need to do is we need to balance this account off, and we see that our balancing figure was 225,000 rands, right? And we've already determined that that is the cost of the property that we have sold. So that would have been taken to an asset disposal account. I think we actually have it here. The asset disposal account. No, that's the investment, sorry, disposal of property. There we go. So there we've transferred the cost of the property. We've seen that we had proceeds on disposal of property of 260,000. Therefore, we had a profit on the disposal of 35,000. If they didn't tell us that figure, ladies and gentlemen, this is actually why I'm doing this song and dance, right? Why I'm giving you this extra information. If they did not provide you with that, if they didn't tell you in the additional information that it was sold for 260,000, then you would have had to go and reconstruct these accounts as we've now seen. Then that figure would not have been known. That figure would not have been known. So you would have transferred the cost of the property that was disposed of here to the disposal of property account. You would have taken the figure that they've given you on the face of the statement of comprehensive income for the profit on disposal of property. You would have, in other words, reconstructed the account. So obviously, because this is a profit, it's going to end up on the credit side of that account. So here it's got to be on the debit side of the disposal account. That figure there, bank 260,000, would then have been your balancing figure, right? It would have been your balancing figure. You all happy with that?
Quickly remind them of something.
Yes, please,
I
please,
don't want to disturb your train of thought, but
No,
and I
no,
wasn't
no,
here for
no.
last week's class. But I just want to remind them that if you had disposed of any other item of PPE, like a vehicle or equipment, then there would have been accumulated depreciation that should also have been taken into account, because then your proceeds would have been the result of your carrying value and the profit or loss on the disposal, rather than the cost and the profit or loss on disposal.
Very good point. Very good point. Thank you, Mrs. Moore. Students, I hope you followed that. That is a good point. In the case of the property, there is no accumulated depreciation. That is why we simply could have taken the cost. But when it comes to the other PPE accounts, the motor vehicles and equipment, whatever else we have, then the profit, like Mrs. Moore said, I'm just repeating what she said. I don't know why. But anyway, then the profit would have been the difference between the proceeds and the carrying amount. So then you would have had to take into account the cost as well as the accumulated depreciation on that item that was disposed of. Thank you, Mrs. Moore. That is a very good point. Okay, let's go to our next category, ladies and gentlemen. Our next category of property, plant, and equipment. We scroll all the way up to our statement of financial position. Our next one is equipment. Equipment, right? So we've got equipment here. Now, like Mrs. Moore said, we can look at the cost and the accumulated depreciation separately, or we can look at the carrying amount. All of that information is there. But before we do that, before we go and reconstruct those accounts, let's just see what they've told us. What did they tell us under the additional information when it comes to equipment? They say no equipment was sold during the year. No equipment was sold during the year. So that helps. That probably means that we don't even need to go and reconstruct the accounts, because that clearly indicates that there was only acquisition of equipment. But we are still going to look at the argument or the logic behind the reconstruction as well. So no equipment was sold, so there was only acquisition of equipment. So that makes it easy for us now. We can simply look at our opening balance when it comes to the cost. In this case, it will only affect the cost because there's no disposal, only acquisition. So our opening balance at the beginning of the year for the equipment cost was 200,000. The closing balance is 240,000. They say there were no disposals. So therefore, ladies and gentlemen, what is the amount of the acquisitions? Acquisition or acquisitions? 40,000. Thank you, Siulisa. Thank you, Mbuso. Thank you, everyone else. Yes. So 40,000. And in a question like this, ladies and gentlemen, unless they tell you otherwise, we always have to assume that the money was received for the disposal and the money was paid for the acquisition, right? So that means that that acquisition will result in an outflow of cash. I'm not even going to ask it. It is very obvious. It's going to result in an outflow of cash. So now we can simply go back to our statement of cash flows. So let's scroll all the way down to our statement of cash flows. Where is it? There it is, right? Acquisition of equipment. And as you've all correctly stated, 40,000. Inflow or outflow? We've already answered that question. It's an outflow of cash, and therefore we have to indicate it in brackets. We have to indicate it as a negative. Okay, ladies and gents, so far so good. Let's go to our last category of property, plant, and equipment. We know there's still another category of non-current assets, but let's just complete the property, plant, and equipment. So the other category that we have is the vehicles, right? Vehicles, we can see there that the vehicle balance at the beginning of the year with regards to cost as well as accumulated depreciation was 0. Okay, and then at the end of the year, we've got a balance with regards to the cost of 180,000 and we've got accumulated depreciation of 30,000. Now we can already conceptualize in our heads that if there had been no disposals, we don't know yet, we'll have to go and look at the additional information to confirm that. But if there had been no disposals, then the acquisition would have been 180,000, the cost there, right? If there had been no disposal. So let's go and see what they tell us about the vehicles in the additional information. They talk about investments there, they talk about property, they talk about equipment. So they don't tell us anything about the vehicles. Right, students, in a situation where they don't tell you specifically that there were disposals as well, in such a case, we can only assume that there were no disposals because there's an increase in the balance from the beginning of the year to the end of the year. If they had told us there were also disposals of a certain amount, then clearly we would have had to go and reconstruct all those accounts that deal with the vehicles. In other words, the vehicle cost, the vehicle accumulated depreciation, and the disposal of vehicles. So we'd have to go and reconstruct those three accounts. In this case, they don't mention anything about vehicles, so we can only assume that there were no disposals. So what was the amount of the acquisitions of vehicles during the course of the year, ladies and gents? If you can type for us. 180,000. Thank you, Siulise. Thank you, Asemasle. Correct, 180,000. So simply now we can transfer that over to our statement of cash flow. So let us do that. Let us just check the amount again. We can copy it. Where was it? 180,000. 180,000. Right. 180,000. We go to our statement of cash flows. We must describe it appropriately. And there we go. Acquisition of vehicle. Remember we said the other day, it's not good enough to simply say vehicles or investments, because this is not a statement of financial position. Here you've got to say what happened with those vehicles, or what happened with the investment, or what happened with the equipment. In this case, a vehicle was acquired. So we're going to describe that as acquisition of vehicle, 180,000, which we've copied over. The only other remaining step with regards to that line item is to determine whether that should be a positive or a negative. So we are going to think about this when we acquire a vehicle. We're obviously going to pay for it. So would that be an inflow or an outflow of cash? I would like if you, yes, outflow. Thank you, thank you, thank you all. Yes, it's an outflow of cash. So therefore, we have to show it as a negative. We have to show it in brackets. Okay, ladies and gents, so that covers all our property, plant, and equipment. Thank you for all those answers. But we know there's one further category of non-current assets, namely our financial assets, described here as investments. So we see at the beginning of the year, so this could be investments in a fixed deposit or in the shares of other companies, whatever it is, something where we have invested our money in. So we see that at the beginning of the year, the investments amounted to 125,000. At the end of the year, it amounts to 185,000. So it increased by 60,000. But now we still don't know whether there were any disposals. So we'll have to go and look at our additional information. As it stands there, it appears as if there were acquisitions of 60,000. But that's not necessarily the case. We'll have to look at our additional information. What do they tell us about the investments? Well, they say their investments, which cost 62,500 rands, were sold at a profit of 6,225 rands, right? So investments which cost 62,500 were sold at a profit of 6,225. So that means, ladies and gentlemen, there was at least one disposal, right? There might have been more, but in total, that represents the disposal of investments, right? So we don't, it's always a good technique, like I said earlier, it's always a good technique to go and reconstruct those ledger accounts. That is why they are there. But in this case, it is actually pretty straightforward to see what the proceeds on the disposal of investments would have been. Who wants to take a chance there? What would you say would be the proceeds? Yes, there we go. 68,725. How did Nkubile and Timbisa and Nande and Asimahle get that figure, ladies and gentlemen? How did they arrive at that figure? They simply took the 62,000 rands, the cost of the investments. Remember, there's no accumulated depreciation or amortization on these investments. They are simply stated at cost, right? So we take the cost of the investments that were sold, we add the profit that we've made on the cost of the assets of the investments that were sold of 6,225, which means that the proceeds on the disposal of those investments would have been 68,725. Right. So we've already calculated that for us, ladies and gents. So let us go down to our statement of cash flows. Investment, let us see where it is. There we go. Proceeds on disposal or sale of investments, 68,000. Right, so we sold it, we would have received money in return. So clearly that would be an inflow of cash, right? So therefore, we are going to show it as a positive. But now, ladies and gentlemen, that theory that we had a little while ago, where it appeared that the acquisition of the investments looked like it was 60,000. Now it clearly isn't 60,000 because there were disposals, right? There were disposals. So now it means we will have to go and reconstruct that account. So let us do that, ladies and gentlemen. Let us go to our opening and closing balances, which we find on the face of our statement of financial position. So we see that the opening balance at the beginning of this year was 125,000. We've already spoken about that. The closing balance at the end of the year was 185,000. Now, just I know you know this already, but just as a procedure, would those at the beginning of each year, would those have been debit balances or credit balances? Please type for us there. Debit balances. Thank you, Asimahle. Thank you, Sianda. Thank you, Raiku. Thank you, everyone. Right. So those would have been debit balances at the beginning of the year. And then we've already seen that the cost of the items that was disposed of, let us just revisit that little sentence there. The cost of the items that were sold was 62,500. So if we have sold investments with a cost of 62,500, would we then go and credit the investment at cost or debit investment at cost account? If we have disposed of it, it already has a debit balance. We've now disposed of some, so some of them have left our profit or our possessions. So then we have to go and credit that account. So you get the idea already. Thank you so much for all of those answers. And now we can go and reconstruct that account. So let us go down to our various general ledger reconstructions. We are now looking for investments, ladies and gents. So there we go. We've got 125,000 at the beginning of the year. We've got, what was it, 185,000 at the end of the year. Let me just add that. So that would also have been a debit balance, right? So that would have been, let me just type for us there, balance brought down, right? It was carried down there, so it was brought down. Where does it from? It comes from the opposite side above the line, right? And then, ladies and gentlemen, we've also got the disposal, the cost of the items that we've disposed of, and that gave us, well, then we've got to find a balancing figure here. So then we see the larger side. Once we've taken the two opening balances into account, the opening balance at the beginning of this year, the opening balance at the beginning of next year, where does it come from? It comes from the opposite side above the line. You've already said in the chat there that when it comes to the disposal of the investment, we'll have to go and credit this account, right? So we already now have all the information that we need on this account except for the flow of cash itself. So now we can go and balance off this account. We add up the larger side, gives us 247,500. We copy that total over to the opposite side, and we see our balancing figure in this case comes to 122,500. And that can only represent one thing, ladies and gentlemen, only represent one thing, and that is the cash flow on the acquisition of investments, right? So here we were sort of forced to go and reconstruct this account. You can also do it in table form, but it's more logical and therefore easier to do it by means of a reconstruction of a ledger account, right? So our balancing figure is 122,500. We've already seen it can only represent the acquisition of more investments. We assume that it was paid for, therefore our contra account is our bank account. And as we've said last week, as soon as your contra account is the bank account, it means money has flowed either into or out of your bank account. Clearly, in this case, where we debited investment at cost, it means that we would have credited our bank account. And if we credit our bank account, we already know that it's going to be an outflow of cash, right? Anyway, so that is the amount that we need to go and copy, 122,500. So we go to our statement of cash flows. There under our investing activities, and there we have an acquisition of investment or investments, depending on how many, 122,500. We know that it's an outflow because we've credited our bank account, or we can simply logically reason through it. We'll see that we acquired an investment, so we had to pay for it, and therefore it'll be an outflow of cash. Consequently, we've got to show it as a negative in brackets. Right, ladies and gentlemen, so we are now done with we have looked at all our non-current assets. Every single one that is a non-current asset, we've had a look at. So now it means we are done with this section that is subtitled Cash Flows from Investing Activities. All we need to do is to add it up. So we add all our positives, we deduct all our negatives, we get a subtotal there of 13,775 in brackets. It's a negative, so there was a net outflow of cash from our various investing activities. Basically, it means we invested more into our non-current assets than what we got out in cash from the disposal of them. Right, so it's a negative, so it's a net outflow of cash when it comes to our investing activities. Let us just pause there for a second, or well, not a second, but maybe 20 seconds or so. Are there any questions on the investing activities, ladies and gents? We are obviously going to look at some more questions. We are going to do one or two more. You already know that we've created a subfolder under statement of cash flows topic 7, which is called additional resources. There's also at this stage just one recording, but also a great analysis of question 2 there, done by Mr. Bormann last year. Right, so he analyzed the question first, so the document is there, and then he discusses it. If we do not get to all the questions, then at least we will post recording of those that we do not get to live in class. Any questions, ladies and gents? No questions. Thank you, Sianda. Right, so there doesn't seem to be any questions. So now we can proceed to our financing activities, ladies and gentlemen. So we just gave it a loose, sort of a tongue-in-cheek term the other day. When we talk about our financing activities, what does that deal with? What kind of activities does that deal with? If you can type that for us just as a reminder, please. Shares, in other words, own capital, and also loan capital, right? All sorts of capital. That's quite correct, actually, in Kobile. All sorts of capital. And then Israel says loans, Milton says shares. So it's all of them, right? That's why, sort of tongue in cheek, we simply refer to it as own capital and loan capital, right, ladies and gents? So let us go and see what kind of own capital and what kind of loan capital do we have. So when it comes to own capital, clearly any movement in our own capital would have been shown, would have been disclosed in our statement of, which statement? If you can type for me just maybe the abbreviation there. Which statement will we find movement in own capital? Not the final balance at the end of the year, not the final. Luyanda, that's the one I'm looking for, not the final balance at the end of the year. It does provide us with a final balance at the end of the year, but we are now looking for movements during the course of the year. So that will be our statement of changes in equity, as Luyanda said there. Thank you. So our statement of changes in equity. Remember, when it comes to our statement of financial position, I'm just going to mention that because so many of you indicated statement of financial position. There we've just got the total. There we've just got the total of the share capital and reserves, right? We haven't got an analysis of it. But we do have an analysis in that other statement, which is called our statement of changes in equity, which they also gave us an extract of there. So here we can see, ladies and gentlemen, when it comes to our ordinary share capital, it had an opening balance at the beginning of the year of 925,922 rands. It had a closing balance of 925,922. And then we see there are no reconciling items. If there had been any issues of shares, any issue of fresh shares, it would have been a reconciling item somewhere here. If there had been any buybacks of ordinary shares, it would have been a reconciling item somewhere in that column. But there is none, ladies and gentlemen. So if there is none, it simply means, as you can imagine for yourselves, that there were no issues of fresh shares during this year, and there were no buybacks of ordinary shares either. No movements. Okay, tick the box, tick the box. Let's go to the other class of share capital. Here we've got preference share capital. Preference share capital. So what happened here? At the beginning of the year, we had none. There was a zero balance. Then, ladies and gentlemen, we see that shares were issued during the course of the year. We've even indicated it with an F when we initially analyzed this whole question. So we know that it has to do with financing activities. And we see that the gross amount, we're going to look at the additional information as well in a few seconds, don't worry. But we just look at our statement of changes in equity first, because that it will be the source of any changes, right? And the gross amount for which we issued shares appears to be 137,500 rands, and it seems like we've written off share issue cost to that account during the course of the year, which means that our closing balance is 136,350. So that 136,350 rands would represent the net amount, not the gross amount like the 137,500, but the net amount that landed in our bank account because of the issue of preference shares. So we are pretty sure about that, but just to be 100% sure, let us also go and look at what they tell us about financing activities in our additional information. So here they say on the 31st of May 2020, which falls within our financial year, 250,000 preference shares were issued at 55 cents per share. Now, all of this, it wasn't even necessary for us to for them to tell us, but let us just verify. Let's audit this, if you wish, right? At 55 cents per share. So 250,000 shares issued at 55 cents per share. If you multiply the one with the other, how much do you get? What was the gross proceeds on the issue of preference shares? If you can type for me, ladies and gents, let's see if our statement of changes in equity is correct. 137,500. Thank you all. Right. So now we know where that figure in the statement of changes in equity comes from, and it agrees with our calculations. Right. So the gross proceeds on the issue of preference shares was 137,500. And then you remember when we did share capital in the second term, when we discussed, amongst others, IAS 32, we said that any share related cost should not be written off as an expense in the statement of comprehensive income. It should be netted off against the capital account of that specific kind of, or that specific class of shares, right? That is, amongst other things, the reason why we did not adjust for the share issue expenses when we did our reconciling note, because that expense isn't part of our profit before tax. We can only adjust for items which were included in the profit before tax figure. But this share issue expense is not part of our profit before tax, right? We didn't deduct it as a cost. We wrote it off here in our statement of changes in equity by netting it off, writing it off against the capital value of that issue, right? So therefore, we are only going to disclose the net amount in our statement of cash flows. So if we again just scroll down to our statement of changes in equity, the net inflow of cash from the issue of preference shares would have been 136,500. So now we can go down to our statement of cash flows. We look for our financing activities. There we go. Proceeds from issue of preference shares. Exactly as we've said it, we're going to describe it, and we are only showing the net amount. In other words, the gross amount of 137,500 less the share issue expenses or the share issue cost that we've written off against the capital value. That gives us 136,350. Okay, so far so good. Let's just go back to our statement of changes in equity briefly, ladies and gentlemen, just to ascertain that there's no other category or class of shares. No, only the ordinary share capital, only one category of preference share capital, and we've dealt with them. So now we are done with our so-called own capital. So all that remains is the loan capital. So now the loan capital, if it's a non-current loan, it will be residing under our non-current liabilities. If it is a current liability or a current loan, it will appear under our current liabilities. So let us go back to our statement of financial position. We can revisit our additional information just now. Let's see, do we have any non-current liabilities? Yes, we see there is a mortgage loan over the property, obviously. So we've got a mortgage loan over the property. The property, therefore, serves as security for the loan. That is why it's called a mortgage loan. At the beginning of the year, ladies and gentlemen, it had a balance of 312,500 rands. At the end of the year, it has a balance of 125,000. So unless we have obtained a further loan, this seems to indicate that we have repaid on that loan, because the balance at the end of the year is less than the balance of the beginning at the beginning of the year. So this indicates that we've repaid, but by whatever the difference between those amounts is. But we've still got to go and ascertain whether we didn't actually acquire a further mortgage loan. So let's see if they tell us anything amongst our financing activities here in the additional information. There, that if that we've given, that we've allocated, only deals with the own capital. This is investing activities. That doesn't represent any of our cash flow activities. And then the only other mention that is being made of any financing activities is that an additional short-term loan of 50,000 rands was raised during the year. So therefore, ladies and gents, if they do not provide us with any amount that relates to additional mortgage loan taken out, it means that the only alternative is that there were only repayments. So we're going to describe it as repayment on the mortgage loan. How much? Now we know we can simply take 312,500 less 125,000, ladies and gents. What does that give us? If you can type for us, please. 187,500, and there seems to be consensus amongst all you lovely students. So I am pretty sure that you are 100% spot on. So 187,500 was repaid on that mortgage loan. So let us go and see in our statement of cash flows. We look for our financing activities so that we can go and insert that amount there. So there we find our financing activities. We see that we've described it exactly as we've just mentioned. Repayment of or repayment on, because we haven't actually completely repaid the mortgage bond. So personally, I would have described that as repayment on the mortgage bond. And as you've said, it amounts to 187,500. Is it an outflow or inflow of cash? Well, if we repay the loan, money flows out of our bank account. So therefore, it will be an outflow of cash. Thank you. Thank you. So that will therefore be indicated as a negative. We've already seen in the additional information. They say there was a short-term loan of 50,000 rands. An additional short-term of 50,000 rands was raised during the year, but that does not necessarily mean that we didn't repay any short-term loan during the course of the year. So we must still go and have a look at our statement of financial position. This time we are going to look at our current liabilities, not non-current liabilities. So we see there appears the short-term loan. What was the balance at the beginning of the year? Zero. Zero. What is the balance at the end of the year? 50,000. Right. So zero at the end of the year. They've told us we took out an additional short-term loan of 50,000. So ladies and gentlemen, just a simple yes or no. Did we make any repayments on a short-term loan? Did we make any repayments? Yes or no? No, thank you so much, Apiwe, Nande, Nkubile, Lindsay, Timbisa, everyone else. Thank you. So there was clearly no other short-term loan at the beginning of the year which we might have repaid during the year. It's only the 50,000 that we've acquired as a loan now, that we've taken out as a loan, that is the balance at the end of the year. And somebody already typed outflow there. Thank you very much. So now we can simply take that 50,000 and we copy it over to our statement of cash flows. So we go down to our statement of cash flows, we find our financing activities, and we type it in. We type it in exactly like we've said there: proceeds from short-term loan raised, or something similar, as long as you've got the words proceeds somewhere there and short-term somewhere there, right? That will be good, right? So not just short-term loan, but at least proceeds from as well. And the amount we've seen is 50,000. And as you can imagine, it's a loan that we've taken out. So that 50,000 would have been deposited into our bank account. So that would represent an inflow of cash. So that we will indicate as a positive. So now we've looked at all our own capital, so-called own capital, and all the possibilities of loan capital. So we are done with the financing activity section. All that remains is that we must add it up. So we add up our positives, we deduct our negatives, and we get ourselves a subtotal. And that comes to minus 1,150, which means again, ladies and gentlemen, that we have repaid more on our loans, either that or when it comes to our own capital, we haven't sufficiently issued preference shares for this to be a positive inflow, right? So we have actually had more outflows of cash, basically relating to the mortgage loan, than we had inflows. That is why that is a negative. Right, ladies and gentlemen, so now we are done with those three major activity sections. So now we can go and add up all our subtotals. So we take our subtotal there: cash flows from operating activities, 84,766 rands, and we deduct any negatives and we plus any positives. Here we've got a negative, so we deduct the 13,775 rand. We deduct the 1,150 rands. That should then give us 69. Oops, what did I just do? I didn't want to move that. Let me just move it back. So that should give us 69,841. Can you just confirm if it does add up correctly, ladies and gents? Just a yes or a no? Hopefully it's yes. Yes, yes, yes. Thank you all. Okay, so that adds up. So if we add up all our subtotals, we get that figure. Oops, now I've gone the wrong way. We get that figure there. 69,841. How are we going to describe it, ladies and gentlemen? It all depends whether that is a positive or a negative figure. In this case, it is a positive figure. So we're going to describe that as a net increase in cash and cash equivalents. If that figure had been a negative, then we would have described it as a net decrease in cash and cash equivalents. Now, ladies and gentlemen, the last two figures are simply figures that we take directly from our statement of financial position. There is no reason why any student should lose this mark or half a mark or full mark, whatever it counts, or this mark. Mrs. Moore and Mrs. Kies will probably tell you the same thing. Once you've got that figure, don't just reconcile this. Get that figure first from your statement of financial position. Get that figure also from your statement of financial position, and then hopefully you'll hold thumbs. You'll hold your breath. In fact, does it actually add up? If it doesn't, well, then you've made a little mistake somewhere along the line. Let's just finish the paper, and if we've got a little bit of time, we can always go and find that little error. If it adds up, yippee, yay, then we are so overjoyed, right? But anyway, like I say, those figures come directly from your statement of financial position. So that one will come from the comparative column because it is the cash and cash equivalents at the beginning of the year, right? So let's go to our statement of financial position. We are now looking for something like current accounts or bank accounts, or maybe they've already consolidated into one figure, which they refer to as cash and cash equivalents. Let's see, no, they haven't actually. So therefore, we will be looking for something like a current account or a savings account or petty cash or cash float, whatever. In this case, there's only one, and it is called the bank account, right? But normally when you disclose this statement of financial position, you would have add all your various cash floats and petty cash and any bank account where you can readily access the money, you would have added together and you would have called that your cash and cash equivalents, right? So there's only one category in this case, but there could have been more. That would have resulted in an additional little statement of cash flows note. Anyway, cut a long story short, there we go. We look at our comparative column. That is the 42,150. At the end of the year, we now look at our current year column. Our cash and cash equivalents at the end of the year was 111,991. So we take that to that final reconciliation section on the face of our statement of cash flows. There we go. Right? That is our balance at the end of the year, so cash and cash equivalents at the end of the year. And hopefully, if we have made no mistake, ladies and gentlemen, that figure plus that figure will give us that figure, right? If we've made a little mistake somewhere, it might not add up, then we can always go and see if we can find that little error. But like we said, no need to lose these marks. By the way, ladies and gentlemen, just one thing I would like to point out here. I'm sure either Mrs. Moore or Mrs. Kies would say the same thing. If there had been a bank overdraft at the beginning of the year or at the end of the year, let's say at the beginning of the year, then that bank overdraft year would have been indicated in brackets, right? Then it would have been indicated in brackets. If there had been an overdraft at the end of the year, that figure would have been indicated in brackets. Let me just see if there's any questions, ladies and gents. Then I'm basically done with question 3. Then we are going to give you a little bit of a break. Maybe we'll see what time we are finished with this one, and then we are going to carry on with question 4. So let us just pause there for about 30 seconds, unless there are lots of questions, then we will make time for them. Are there any questions on this particular one that we've dealt with, question 3? No questions, right. Ladies and gents, thank you so much. Don't go away yet. We are going to continue with question 4. I just want to stop this recording.